So Jerome Powell comes out and says there's going to be interest rate cuts in 2024, and the whole market likes it. Finally, there's some horizon to this terrible economic situation that we are in, especially with equities. But there were some bombshells that he dropped that wasn't so, let's say it wasn't so, singing kumbaya around the dance fire, you know what I mean? So let's just get down to it. The video of Jerome Powell talking was about an hour and 30 minutes, but I crunched it down to maybe less than 3 or 4 minutes, clip by clip, so we can see exactly what the bombshells really were. So let's get down to it. Smash that like button and subscribe if you haven't already, man. Let's go. So he first starts off by saying something very positive. This:
inflation has eased from its highs, and this has come without a significant increase in unemployment. That's very good news. But inflation is still too high. Ongoing progress in bringing it down is not assured, and the path forward is uncertain.
Now, this is very good news. We went from 8% inflation rate to now just about 3%, which is amazing. All that without an insignificant increase in unemployment, which is really good. I mean, usually when you want to do these things are much worse. Unemployment is much worse, but they did it. Unemployment right now is around like 3.7, 3.8%. And although it's slowly increasing, it's not bad for a situation that we are in. So that's really good. But he also says this about unemployment.
The median unemployment rate projection in the SEP rises somewhat from 3.8% at the end of this year to 4.1% at the end of next year.
They're predicting a 4.1% unemployment in 2024. So this is interesting. Anyways, we'll come back to this. Let's continue with this.
Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
So this part is interesting because this is the first time we hear him saying that the interest rate has been paused. He's pretty much confirming that they've paused, even though they've said last month and the month before that there's another 1 or 2 hike coming. It's paused. And even though we knew about it, it's going to be paused back then, but now he's confirming that now we're in a pause economic cycle with the Fed. So that's really good. That's a really good sign that the next steps are going to be cutting and the economy is going to get better. We're going to have crazy GDP growth in 2024, right? Wrong.
In our summary of economic projections, committee participants revised up their assessments of GDP growth this year, but expect growth to cool, with the median projection falling to 1.4% next year.
Jerome Powell is saying that economic GDP growth in 2024 is going to be 1.4%, down from 2.5 or 2.8% this year. So what's going on here? What is he trying to say? He's saying that, okay, we've paused right now, but we're expecting in 2024 to have a lower growth year. Don't forget, guys, this year, 2023, was supposed to be a low growth year, but we're getting 2.8%, which is amazing. So what is Jerome talking about? Why is there going to be a slow in growth? And this is what he says later on.
I think there's always a probability that there will be a recession in the next year, and it's a meaningful probability no matter what the economy is doing. So it's always a real possibility.
He's saying there's a possibility that there could be a recession in 2024. So let's put the puzzle together a little bit, okay? Right now in 2023, we're at we're going to probably finish off the year around 2.8% with a high interest rate of 5.2, 5.5%. In 2024, they're expecting a GDP growth of 1.4%, while unemployment is going to be 4.1% more than this year. So what it sounds like what could be happening, and this is a very rare occasion, is if we're trying to hit that 2% target, which Jerome Powell did say that the 2% marked inflation is still the case. The fact that they are expecting a GDP growth while in unemployment a bit of a rise, that means there is going to be a soft landing, which is amazing. I mean, out of the 20 times that they increased rates and cut rates, there's always been a massive recession after that. But it looks like what they're saying is that we're not going to be going into a massive recession. And if there is going to be a recession, it's going to be a mild one. 1.4% growth, sure. But maybe 2 out of the 4 quarters are going to be probably negative for some time. And then the other 2 will make up for it to be 1.4, while unemployment rate is at 4.1%. So that's very interesting if that's the case. But he drops a bombshell on what the inflation numbers he's expecting to be, and it's not really that good.
The median projection in the SEP is 2.8% this year, falls to 2.4% next year, and reaches 2% in 2026.
I think he meant by end of 2025, not 2026. So I don't know. I think that was a typo there. But end of 2025, that's when they think they're going to hit 2% inflation. I mean, it's crazy. They're thinking end of 2023. So when data comes out in January, outlining how December was, it's going to be 2.8% inflation, which is really good. We're hitting the 2% mark, right? We're just not reaching we're not reaching the 2.0% mark. We're in the twos, but we're not in the 2% mark, which they're really trying so hard, which I do think it's a little bit of a mistake. If they try so hard, this can actually accelerate to deflation and increase the chances of being in a recession. But they're saying end of 2023, 2.8% inflation target, 2024 at 2.4%. That was a little bit of a shocker to me that it's only going to be 0.4% lower than 2023. Why is that? I don't personally agree with this, but we'll leave my thought at the end of the video. And obviously these guys are analysts, they know what they're doing. Hopefully. But they're saying 2.4% by end of 2024 and by end of 2025, 2%. So another 2 years until we hit that 2% mark before the market or the interest rates can go down. That's not that good. I mean, as a Tesla investor, that doesn't seem to be that good because we do rely on interest rates a lot for people to buy vehicles at the moment, at least. But it looks like based on the Fed tone, inflation is going to stick around for a whole lot longer than we think. And so interest rates are going to stay a whole lot higher than we think. And what the Fed is trying to do is trying to squander any demand as much as possible without, hurting the economy as much, which is a really hard thing to do. And he says it here himself.
If you have growth that's robust, what that will mean is probably will keep the labor market very strong. It probably will place some upward pressure on inflation. That could mean that it takes longer to get to 2% inflation. That could mean we need to keep rates higher for longer. It could even mean, ultimately, that we would need to hike again.
Which is insane because the more growth there is, the higher growth there is, the higher these higher interest rates have to stay and probably even hike them if these high prices, these high interest rates won't dampen the growth. But personally, in my opinion and my thoughts, these are all projections, right? I'll tell everything at the end of the video, my thoughts and everything, but these are all projections. Things change very quickly. Who knows, maybe a black swan event could happen. Maybe another pandemic, knock on wood, doesn't happen. And we're going to print again and bring interest rates back down to zero, right? What is confirmed again for the second time is that interest rates are paused. And he also says interest rate hike has peaked. No more higher interest rates as of now, that is good news.
The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%. and to continue the process of significantly reducing our securities holdings. While we believe that our policy rate is likely at or near its peak for this tightening cycle.
Now here's the next bombshell that he drops. The price rates, how low they're going to go, how much they're going to cut. Check it out.
If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of 2024, 3.6% at the end of 2025, and 2.9% at the end of 2026.
4.6% in 2024, 3.6% in 2025, and 2.9% in 2026. Sheesh! But wait, we can only have this interest rate cut if we see the economy lacking. Right? It's a double-edged sword, guys. If the economy is doing great, interest rates are going to stay as high as they are and probably even go higher because we need to dampen inflation. The more growth, the more demand, inflation could probably spike up. And not to mention, if we do reduce rates too soon, inflation will go right back up again and we're going to increase rates again. So it's a very sticky situation. What we are trying to do, what the Fed is trying to do is to bring us back pre-pandemic levels, right? Economy is growing at 2%, inflation was at 2%, and interest rates was at 1%, 2%, economy was growing, companies were growing. That's where we're trying to go back again. But because we have so much money in the flipping system, it's just hard. And Jerome did mention that they're still continuing to quantitative ease to remove a lot of money out of the system so they can help with inflation. And of course, this has a lot of pain. This can hurt a lot of businesses and a lot of individuals because we're going to have less money into the system until we print again. But cutting interest rates, even rising them, is a cause and effect thing. When inflation goes high, we increase interest rates so we can dampen that. But when we go to deflation or when inflation goes lower and people are not buying it, the economy is not working, there's no GDP growth, we cut interest rates and we turn on the money printer. That's how the economy works. It's very simple. But in this case, in 2024, if we're going from 5.25 to 5.5% all the way down to 4.6, I mean, that's about almost a 1% basis points, which is which is a good drop. It's going to help a lot of companies, especially Tesla, because then they'll be able to finance more cars, increase prices again, and overall bring back the profits that they lost in 2023 and recover in 2024, which I did cover that in this video over here. But then in 2025, they're saying 3.6%, and then in 2026, 2.9%, which these are good rates. These are rates that we can live with. But again, this only comes with cause and effect. If we don't have the growth, for example, if they're projecting 1.4% GDP growth in 2024, and an unemployment rate raising to 4.1%, and inflation going to 2.4, even lower, then yes, they will start to cut rates. But if we see the opposite of that, we see similar growth from this year to next year, and we see employment rate actually staying the same or going down, maybe it's not a good idea to reduce rates, because that's going to increase inflation. Inflation probably won't go down. Because look, the Fed only will cut rates if they have to. If they don't have to, they will not do it. Because if they wait too long, we're going to go to deflation and things are not going to look good. I mean, if you look at Canada right now, we're in negative GDP and we're thinking to, cut rates as early as March. So they have to be very careful with this, because on the other hand, if they do cut rates too soon, then inflation will go back up again and we have to increase rates again. Really, it's a very hard thing to do, but the way they're handling it, the Fed, they're actually doing a pretty good job if you ask me. And if this is the projections they're going for, and 2024 is going to be a lower GDP than in 2023, only for that year, and then we have interest rates going lower and lower, then that means 2024 is going to be a recovery year, and then 2025 is going to be an explosive year, going along with 2026, because then we're going to have rates keep going lower and lower. And again, that's if we don't have any black swan event happening anywhere else around the world. So what are my takes on this? In my personal opinion, I don't think inflation rate will be 2.4% in 2024. That is going to be lower than that. I think we're probably going to go below 2% in 2024. And I think we're going to see a much lower interest rate than 3.6 or 4.6% in 2024. I think we're probably going to go as low as 4%. And I do think we're going to see a very soft recession happening, I would say in the first quarter or the second quarter of 2024. That's just my opinion, my take. I think it's going to be a much better year in terms of cuts going even lower than we think, in my opinion. Nonetheless, guys, any interest rate cuts coming in 2024 is welcoming. I'm going all into Tesla stock. So this will really help the stock go even higher, because it can increase prices and help increase their margins and recover from 2023. It's going to be a very interesting 2024, and I am looking forward to it. Mainly the second half of 2024. I think that's when the real bull market's going to start, when interest rates do get cut for the first time, because that's when we'll probably get a mini recession around that time, maybe just before that, a couple of months before then. But that's what I think, guys. That's what I think. I do believe that 2024 is going to be a great year for equities, for GDP, for all that, for interest rates cuts. It's going to be a great year, and it's going to be a recovery year for everybody. Again, unless there is a black swan event that we don't know, like maybe China invading Taiwan. I mean, I don't think that's going to happen. Or maybe Venezuela with Ghana, Guyana, whatever that's going on. There's a lot of things going on around the world. You never know, right? But for the looks of it, because we're projecting what we see now, tomorrow things can change. And it's 2024, for the second half of it, it's looking pretty good. And as a Tesla investor who's going all in, I'm happy about it, and I'm looking forward to it, because I do think price target for 2024 for Tesla stock is 350. You guys can check the video here to see how I got that number. It's going to be a sheesh year, and I do think it's going to be a year where Tesla's going to not only recover from their 2023, but go above and beyond. So that is a sheesh moment. Guys, thank you guys for watching. Smash that like button. Get your I Bought the Dip t-shirt, or I Keep Buying Tesla Stock shirt. Use the code ISAIDGFY to get 10% off. Subscribe, and I shall see you guys in the next video. See ya.